Let's take a look at some information and charts on Cardano for brave new coin. Cardano is another proof of stake chain that, like many others on paper, is fairly undistinguishable from its peers, in my opinion. But we'll take a look at some data and hard facts on the whole Cardano experience. And I would be remiss not to discuss the early funding of any project, but specifically Cardano began development in 2015, had a token sale from 2015 to 2017. Mostly in Japan, as you can see by the voucher holders at that time, 95% Japanese, and they were able to raise 62 million publicly traded tokens in 2017. So an article I wrote, by the way, in 2020. But point is here, they've been in incubation stages for a long time and have only recently just started to go full-blown proof of stake, ideally towards a higher degree of decentralization. And we can measure that through the nodes and the validators, and who has the ability to shut the network down, basically. If the network is robust and anti-fragile, then ideally nobody can do that. Nobody can even fix the network independently. That's another measure of decentralization. If there's a player who can flip the switch back on, not exactly decentralized. Certainly things like Solana and Stellar come to mind when you're thinking about that scale of decentralization. Things like AWS nodes on ETH come to mind. You know, like where's the line? It certainly isn't binary. It gets gray in the middle. And in general, most people don't care anyway. So it's tough to even want to talk about that because it's mostly just going to be ignored, until it's of the utmost importance. One thing Cardano does have that most other projects do not is a profound, that's one word we can use, roadmap. And you can go through and see all the plans for things that they're adding or have added. Over time, we can see what's coming up, scaling, governance, how this has shifted, and what the future will look like, at least in the planned out sense for Cardano. So if we look under the hood a little bit on some of the staking stats, this is adapools.org. 71% of the network is being staked according to them. And if we look at the validators, they're more Tezos-like in that it's basically apparently a bunch of randoms, right? Like I don't see VCs here on the list. I don't see common names. I don't even see exchanges on these lists for Cardano. And for me, that's what you want to see if you're truly talking about a state of decentralization. I don't want to see any VCs. I don't want to see any exchanges, right? Now, the chain itself may still be vulnerable to centralized actors or centralized activity, but at the very least, the nodes are seemingly anybody and everybody, right? Something else I don't know is the size of a full node on ADA. How many of these pools run full nodes? Also very important to know when you're measuring decentralization. Another thing to look at specifically for Cardano, because they have that stat, is active staking wallets. You can see this for the most part is one-to-one with price. Except for recently, curiously enough, unless this is an actual data point down here. But up until recently, even with the falling prices, staking wallets remained rather constant. And that's the fickle thing about proof of stake for newer entrants, especially. If they're in it for the long haul, they don't care about price. They're price agnostic, right? But if you view staking as icing on the cake with a cherry on top where price is already appreciating and I'm just getting interest on my appreciating asset, then those users are more likely to say, you know what, I've had enough. The interest I'm collecting on my holdings is being eaten alive by price depreciation. So it makes no sense, right, to continue to hold that for most people, unless they're in it for a multi-year, multi-month scenario where they think things like ADA or Solana or any other proof of stake chain can go the distance over time. I think you're more likely to see fairweather fans on the staking side of things when you see these mega run-ups in a very short period of time, which attract a lot of attention. And then when that stops happening, right, when the music stops, when the party's over, most of those people just leave, and they won't be back until they see that price appreciation again. And I mean, that's just the smart thing to do, really, for anything. Well, why not? Unless you're a diehard believer or a diehard community member in any of this stuff, it's easy enough for everyone to just show up when there's a party and leave when the lights go back on, right? And according to stakingrewards.com, the adjusted reward is 1.35%, which is better than Solana. Participating, according to them, is 71-ish%. Running a pool slightly better than delegating. But in a bear market, this could be on par with stablecoin deposits on DeFi or lending and borrowing. Typically, you see a run up in interest rates on coins in a bear market because you need to borrow those to short, typically. And typically in a bull market, you see a run up on interest rates for stablecoins because you need to borrow cash to buy the coin. Not always the case, but that's the usual pattern anyway. So I talk a lot about proof of stake beating or not beating stablecoin interest, but in a bear market, it's kind of a different story. But on the other hand, you're also getting mega price depreciation in a bear market. So 1% per year isn't going to move the needle for you, right? If this is down 60 to 90% that year, what's 1%? Who cares? Whoop-de-doo, So that's something to consider, certainly when you're looking at stats like this. If you look at on-chain metrics for ADA, transaction counts in the line, transaction sizes in the fill, you can see as transaction counts are rising, transaction sizes are falling, typically indicative of DEX activity or DeFi activity or just microtransaction activity in general. Recently, though, transaction counts have declined significantly. If we take the weekly average out of the equation, basically all the way back down to previous levels. So this could have been an airdrop. This could have been a one and done situation. I didn't see anything news-wise as far as what happened with Cardano here, but I'm sure there's a reason for it. Could also always just be spam, but I doubt that's the case here. NVT and active addresses in the fill, NVT in the line. A declining NVT is extremely bullish. Rising active addresses, extremely bullish. So it's hard to fade price here with the fundamentals that look like this. When I get to technicals in a second, though, it's extremely obvious what technicals are telling you, and it is not as bullish as what these fundamentals are telling you. So I'm always interested on what's going to win here. Invariably, it's usually the technicals, because the technicals give you a timing component, whereas fundamentals tell you what to buy, technicals tell you when. So I don't hate leaving ADA on a monitor status. I don't trade it. I never have, probably never will. Maybe I have traded it like many, many years ago, but it's hard to be bearish on anything that looks like this because this is a significant amount of activity. This is a monthly average. I'm sure it's down slightly recently, which it is. So, that active addresses on a monthly basis is going to grind significantly lower quickly. But how this sits now, hard to be bearish on that. Then if we look at MVRV, another measure of price versus on-chain activity and price itself in the line there, for most coins, this lines up as highs in MVRV with local highs or highs in price, as well as lows. You see lows when MVRV gets pushed lower and lower and lower, typically 1-to-1. And most recently, you saw MVRV get to around 2.1 with price at 2.7, which was very, very close to the all-time high, at least the effective all-time high. So we're well off from that 2 point, closer to 1 now. And really the buy zone doesn't kick in until like 0.5, 0.5 or less historically, even down to 0.3, 0.2. Those are where the lows have been as far as the buy zone. So it's certainly not in the sell zone, but it's also definitely not in the buy zone. It's not bearish enough to get in the buy zone yet. And when it gets below 1, it's telling you there's more on-chain activity than market cap on any given day. When it gets to 2, it tells you that market cap is 2 times greater than on-chain activity. So you kind of get this speculative component, activity versus price. So I would definitely watch this if this does go mega bear over the next 6 to 12 months, which I think it will. This is definitely something to watch actively if you're looking to get into Cardano. Cardano is also listed in a bunch of large funds or indices. This is the Grayscale Large Cap Fund, I believe they call it. And it's also in the Bitwise 10. So it's out there. People know about it. I don't know if that's enough to move the needle for price, but for the institutional players, they certainly have opportunities to get exposure to Cardano. If we look at Cardano Google Trends worldwide past 12 months, mirrors price pretty closely. Highs in Google Trends match highs in price, and currently Google Trends are flat and down along with price, so no shocker there. Ideally, Google Trends are most effective as an oscillator. You see when things are overbought, you see things when things are oversold, or you see when price is diverging from Google Trends. So if you're bullish, you want to see Google Trends just flat as price is rising. And if you're bearish, you want to see sort of all-time highs in Google Trends or Google Trends falling as price is rising. Depending on your timing, and if you believe Google Trends are leading or lagging, this can be a pretty valuable metric for what's going on. I'm going to start here with the 15 to 200 on technicals, and it's incredibly simple. I don't know if I've seen a cleaner 5200 on the daily than this, but I have these EMAs, VPVR and RSI. And how MA crosses work is You can either long, open or close, long or short on any cross every single time. And the idea is that crosses that pan out work for the ones that don't. Even if I despise Cardano and everything it stands for in 2020, if I was purely looking at technicals, you would long this. Even though up until this point, it was a choppy ranging mess, didn't matter, right? The MAs aren't telling you it's going to go to infinity. It's just telling you, yeah, it's higher in the past 50 days than it has been in the past 200. So ever since then, it's bounced on the 200 over and over and over. It's even bounced on the 50 quite often. Today, or this week, it's setting up for a death cross. The first death cross since April. So MA crosses get weaker and more meaningless when they cross often, and they are extremely meaningful when they cross slowly or over multiple months, in this case, multiple years. So this is a very dangerous signal telling you, hey, trader, momentum is weakening, strength is weakening, right? Now you can be a community member and stake and do everything you want, right? We're going to put that in a box to the side. That's the first half of the video. Second half of the video is always where the truth comes in. Can't hide, right? From the technicals, and it's very simple. Below the 200, death cross, that's bearish. End of story. Where this goes from here is another question, but you can always measure out downside fibs. You can look at support for volume. You can see there's relatively little volume up here relative to sub 20 cents. And there is the beginnings of a bull div on RSI as you're seeing lower lows in price on higher lows, lower lows in price on higher lows in RSI. Yeah, that's a bullish divergence. And here's the cloud also telling you it's been below the cloud since November. I think in the last video I said this didn't look so hot, or some weekly video I was comparing ADA to something else. And the cloud hasn't been wrong, That's why this is so powerful. We're bullish if we're above, we're bearish if we're below. It doesn't mean it's going to 5x every single time. It doesn't mean it's going to sell off to 60% every single time. It just means the conditions are not currently there for a long trade. They won't be there until we're back above the cloud, which is basically around 220 at this point. So that's really all there is for ADA USD. It looks bleak and not good. How does it look against BTC and ETH? Probably worse, specifically against BTC. Already had that death cross, already broke below the 200 for the first time in several months. Immediately, that's a warning sign, or should be a warning sign, for the long side of this trade. Previously, it had this multi-year head and shoulders. It's even had inverted head and shoulders within those areas, expanding, broadening wedge, whatever you want to call this other stuff that's down here, white coffee and accumulation. And that target move was around basically where price is now. And it's kind of losing that level. The next support on volume-wise is around 2,000 to 3,000 sats, 2,000 to 2,500 sats, something in there. This previous low, around 2,000 sats. And then below that, it's back to the breakout point, which is going to be around 1,300 to 1,600 sats. And there's plenty of volume down there to act as support, but that is another 50% down from here. So again, there's no bullish anything here other than a bull div. You're seeing lower lows in price on less momentum. So it wouldn't surprise me if this thing tries to mean revert and then sells off. Link BTC, same exact thing. That even has a better setup with a head and shoulders pointing to a significant downside. This could shoulder, head, make another shoulder, and then hit that 50% plus drawdown. But whatever this is setting up for is not bullish by any means whatsoever. And against BTC, it's been bearish on the cloud since 4,500 sats. Cloud gave you a big heads up. 200 gave you a big heads up, said, hey, that's it. Time to go. Get your coat. It's time to get out of this trade. And against ETH, it looks even more dire. Just brutal, straight up, straight down. And it does have bull div here. It's even pierced the volume support. So of all the things that, ETH, this, that, and the other thing that led up to this in 2021, ETH is slow, ETH is bad. I agree with all those things, but at the end of the day, the chart is the chart, price is the price pays. And it's pretty obvious what's been happening here. Below the cloud, below the 200 death cross. That was October, right? So it's no surprise that this thing is bearish because the conditions are such for bearishness. This also has this, I don't know what this is. I meant to look it up on the last time I saw it, but it's got this this bat symbol. It's like an inverted head and shoulders, or like an upside down head and shoulders. Shoulder, head, I don't know. It's weird, but it also typically acts as a reversal. So it's no surprise there. Of all the times I've seen it, it's usually been reversal from trend. So it doesn't look good on USD, doesn't look good on BTC, doesn't look good on ETH. fundamental underlying on-chain metrics look decent. MVRV, not yet telling you to buy, and won't tell you that for quite some time, most likely. And depending on whether or not you care about shades of decentralization, Cardano looks like it's doing its best to just get randoms involved. That's what you need. Just worldwide, globally, bunch of random people, spin up some nodes, do some staking on pools, and then we can achieve higher degrees of decentralization. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.